Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating the session tonight with Rob Roy. As always, we need to go over some important housekeeping details about the session, and then I'll introduce Rob. First and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it if you like, but that's the main point to take away. All right, so for this session, as all of us that have been around for some time know, or for anyone that is joining us for the first time, we are live streaming to multiple different platforms. So we will have Rob's presentation, go through some case study considerations, and then with the time remaining, we will take a combination of questions from all of the all the platforms that we are live streaming to. So keeping in mind that we are going to try to get through as many questions as we can. We do have a limited amount of time for the Q&A portion for this session. So if we don't get to your question, just know it has nothing to do with the validity. We just only have so much time. So if we don't get to your question, definitely take that as encouragement to attend the insiders meeting when that's for our subscribers only. And it's a 45-minute Q&A portion after Rob's presentation. So it's certainly a much higher likelihood of getting your question addressed in that session. Lastly, we have the chat window as well. So for any support related queries, I can handle them there. And of course, for any interaction amongst other attendees, please feel encouraged to use that window. For our Zoom audience, we do just want to make note that by default, it goes to hosts and panelists. So if you would like everyone on the webinar to see your message, be sure to change that to at the bottom to everyone. All right, well, we're still at a pretty low volume, and the market seems to be waiting on Powell's speech tomorrow. So be interested to hear Rob's thoughts as always, and looking forward to interacting with you all. Thank you for joining us for this live session. And at this moment in time, I'll introduce who we're all here for, the man of the hour. That's Rob Roy.
Hi, everyone. Thanks, Zach, and welcome to this week's TradeFinder Live. It's going to be an interesting session as we start talking about the markets, as you're going to see when we get there. And starting the video, you can see that I'm back in the Dragon capsule, back in the land of incessant pounding. There's 3 houses on my street that are getting new roofs. So apparently the hurricane didn't seem quite that bad, but it did some damage around the neighborhood. And you can imagine all the roof pounding, and you got it triple. Starting quite early in the morning and lasting all day long. So that's the opposite side of the coin of living in paradise in Florida. Talking about the markets, we'll go through and talk about not just ours, but the international markets as well. Welcome to everyone that's viewing us on the various live streaming social media platforms. And we appreciate you spend some time with us this evening. And then we'll go through and look at example of a case study trade alert that we send out to our alert subscribers at EWOtrader.com, give you an idea how that works. We'll review any case study considerations that could be considered to be open that we identified in previous TradeFinder events, and then we'll look for one this evening, and with whatever time we have left, we'll go through and do a Q&A. So with that said, let's go ahead and take a look at the market. So once again, thanks everybody for being here. So we take a look at the market in the weekend update. If you happen to watch that, and if you're watching on YouTube and you haven't visited our channel, please do so at Elliott Wave Options. Every weekend we do a market update, and talked about how when we have these holiday weeks, and it almost seemed like everybody took the entire week of Thanksgiving off, and hope everybody had a great Thanksgiving holiday. You can see that the volume was pretty slim, and then that little tiny bar is Friday because it was half a day. And what happens often is you have these low volume rises. There's a old expression in the markets: never dull. Let me try that again. Never short a dull market, and that's what they're talking about with dull is low volume, and the market just tends to kind of rise up. It happens a lot between Christmas and New Year's, and that's when they call the Santa Claus rally. The market tends to drift up because there's nobody there, right? Everybody takes that week off. And then I mentioned that often that gets reversed when everybody comes back. Well, the idea normally is you have this low volume rise, and then volume kicks in and you come back down. Well, as you can see, volume didn't really kick in. It's still been low volume, as Zach said in the intro. And basically what we did was just erase what happened last week. So forget that last week happened in the markets. We're right back here. We look at the moving averages, and we're just a hair below the 10-day moving average. And so Zach also mentioned Powell's speech. Seems the market is waiting. Now, there's been some commentary from other Fed governors that come out and said that they're going to raise rates until they see inflation down where they want it to be. When the last minutes were released from the last FOMC meeting, it seemed that some were getting a little concerned at the pace and degree of the rate hikes could do more damage than they'd like to see to the economy. And then you can see the other side of the coin where others are saying, well, we're going to keep raising rates. So I think the market is a little confused right now as far as, is the Fed coming close to a pivot? And boy, it took a lot of heat in the update that we did on YouTube, where I said, did the Fed just pivot? And that was in response to the FOMC meeting minutes being released, where a lot were saying that, hey, we need to slow the pace down because the definition of pivot has changed. Originally, the definition of pivot was when the Fed goes from raising rates to cutting rates. And I said that I felt like there's a chance they would go from raising rates one meeting to cutting rates the next. I still think there's a chance that happens. And then they were like, no, the pivot is going to be once the Fed stops raising rates. So they didn't want to wait for the cut. And then it's no, when they stop raising 75 basis points is going to be the pivot. So all I did was pose the question, have they pivoted? Is there a difference? And people are saying, how can you say the Fed pivoted? Well, you have to look at the fact that the media has changed the definition of the Fed's pivot from what it originally was, going from raising rates to cutting rates. No, they're not close to cutting rates, I don't think yet. Sometime maybe spring, summer next year is when we might see that. But there was some chatter in the minutes, at least, of perhaps slowing the pace down considerably. And now everybody's like, well, which is it? And I think they're hoping that Powell, when he gives his speech at the Brookings Institute, it'll be at 1:30 Eastern time. If you watch the markets, I think you'll see some volatility at 1:30 p.m. tomorrow. So be watching that. And I think we'll likely get that volume back up to average. And then we'll find out, I believe, if we are going to continue back to the upside, take out this wave 4 and disqualify this Elliott wave pattern, or if they do continue to sound hawkish, maybe we just start to head back down and see if we're going to create this wave 5 to the downside. The markets are a mess right now. When I start going through and showing you the charts, you'll see what I mean. I don't know how you pick a direction in the markets right now. We've been notoriously quiet in our alert service for our alert subscribers. I've said this before, sometimes the best trade is no trade. And that's where we are right now, because when you look, every market's telling you something different. How do you pick a direction right now? How do you figure out what to do? And when it's like that, you just wait. there's nothing wrong with being patient and letting the market tell you where things are going to go. It will work itself out and the markets will be in sync again. They are not right now. So low volume today, I think waiting on the Fed tomorrow. And when we get to the rest of the markets, you'll see what I mean. A little bit of a tick up on the 10-year today, perhaps anticipating a little bit of a more hawkish Fed tomorrow. Looking at the dollar, a little bit of a tick up there as well. Likely the same thing. Now with the dollar, we didn't quite take out that wave 4 low right at the 38.2% fib level on the 10-year. Just enough to move it to 40%, but still call it at the 38.2% level. And if you're newer to Elliott wave or these Fibonacci ratios, etc., I mean, just watch. Love to have you each and every week here on TradeFinder, and you'll see these things. Look how much sideways we've gone ever since we came down back there on the 16th of November to hit that 38.2% fib level. So just going dead sideways here as we wait to see what Powell may say, if anything, tomorrow to move the markets. I do think the markets are going to move regardless of what he says, whether or not he comes out with anything earth-shattering or not. We'll just have to wait and see. And then taking a look at the VIX, you can see we did gap up yesterday. And so, we need to fill that gap. When we gapped up back here in August, we took off to the upside for quite a while before we came down and filled the gaps. And you've heard me talk about this numerous times. Gaps get filled, but you don't always know when, or we don't know when. Sometimes they get filled immediately. Sometimes it takes some time for them to get filled. Is this going to be a breakaway gap? Are we going to take off back to the upside on the VIX? Or was this just a blip correcting, taking back what the market gave during the holiday shortened week, and then we come back down and try to test 20 again? So that gap is interesting as far as where we are filling the gap versus, and we could possibly fill it before Powell speaks at 1:30. Right now, the futures are up 2 points, so nothing's going on. So pretty quiet in the markets right now. We'll see how that plays out. All right, so let's take a look at some of the other markets, and you'll see what I mean. So you saw the chart of the S&P. So now let's look at the diamonds. And we've been talking about, are the diamonds the new leader? Look at that. Look what happened. So we relabeled. We were waiting. We said that a new impulse, when the Elliott wave pattern completed, we went back to the previous 4, a new impulse would show itself. And we were wondering, is that an A wave? Well, it's a wave 3. So how about that? The diamonds have labeled into a wave 3. Now you can still have a wave 4 correction at any point in time. So it doesn't mean that we're done going down, but isn't that interesting that we go back and we look here at the S&P, where we haven't disqualified this pattern yet. On the Dow, the diamonds, we disqualified it a long time ago. And not only that, we've relabeled to where this is a wave 3, and we've got this really nice zigzag here. We'll be doing session 2 of our zigzag mastery course. For those that are interested in education, we go through and we talk about all these things that you hear week after week. And we almost hit that 100% extension in this zigzag already. So could that be a point where perhaps we come back down and start the wave 4? But wow, just to see that actually label as a wave 3 to the upside in the diamonds is amazing. Now look at the Qs. Check this out. So you're talking about how confusing it is to trade right now. What do you do? And I go back to saying, when it's this confusing, you just don't do anything, because you're just guessing when you have an indicator line. Remember when all the markets were lined up and everything was showing the same thing? Not so right now. And we have this really important support resistance level at 280, and that's exactly where we are on the Qs. We touched it on the low, actually closing at 280.57. And if we look at the moving averages here, you can see that the 10, 30, and 50 are all gathering, everything happening right at 280, which is just incredibly important level on the Qs. Now, if we bounce from here, perhaps we disqualify this wave 4. But if we break below that 280 level, that could be energy to start the wave 5 to the downside. But we have to break that level first with follow through, and we're not there yet. So even though we've moved to the downside in the Qs, we haven't broken that important level at 280. But look at the difference in all the markets as far as where we go from here. And so now you know what's next. Now we got to look at the IWM, and we had gone up and thought, last week we said Would we be able to take that out during the holiday shortened week? Probably not, because we were too far below, and sure enough, we didn't. So here we are, dead smack in between. That Elliott wave comes off because that's in the 82% wave 4, so that's disqualified. And then you can see that we have the 170 to 190 trading range once again still in play on the IWM, right back in the middle of it at 180. So nothing is telling you where things are going to go with the markets. Perhaps after tomorrow, we get a little bit of a directional move, some more volume to move things, and then we could start to look at where we go from here. But just absolutely unbelievable to see what's going on with all these different markets. So taking a look at some of the international stuff, we'll look at Bitcoin here in just a second, because that's pretty interesting as well. But when you look at the EWA for Australia, we had talked about how important it was to get back above 23, and we did, and we're holding right there above the 10-day moving average, an area of resistance from August, a wave 4 right around 50%. You can start to see some separation between the 10 and the 50-day moving average. You don't want those to get too separated. If you're long the Aussie market, you want to see those closer together, because when they separate, then that's ripe for a corrective move. But we still have the potential for going down to a wave 5 there. But as long as it holds above 23, that's a more bullish sign. And we still have this gap here that's yet to been filled up near 25. So not a whole lot's happened there for the last week or so either, but getting above 23, pretty important. And looking at the EWC for Canada, you can see that turn back down. We didn't hold above 35, and the big key here for Canada is 36. Really, there's more resistance there, but you got to hold above 35 before you can go to 36, and you can see we closed below the 10-day moving average. So a bit of a weak move there out of the EWC, and rough to start the week here. And then there's support down at 34, and the big support, as we've talked about in the past, is all the way down here at 31. There's another level of a little bit of support. So you can see that if the EWC, if Canada is going to come down, it's going to come down in stages, because there's support levels on the way down, just as it was kind of choppy going the way up. It would be the same on the way back down. Go ahead and slip in Bitcoin here. And the reason I said it's interesting is we just went sideways so long between 18 and 20,000. And then we had the big drop based on the FTX news. And now we're down holding at 16,000. If we break down, I think the next stop would be 12. I mean, we've talked about this 4,000 increment in Bitcoin for so long. Months ago, we started talking about that. So now we're holding at 16,000, and perhaps we can blast off from there and go back and test 20,000. But if we break, I think 12 is next. And then we see what happens from 12,000, just bumping our head on the 10-day moving average every single day here. But look at this sideways move. I don't think this is that much of a descending triangle. You could make an argument for one, and I probably wouldn't fight you on it. But I think that we're getting more of the launch pad effect with this really sideways thing, which means some sort of a vertical move from it. Up, obviously, we bump our head at 20, down, we go down to 12, I think is what's going on with Bitcoin. Really not a strong directional signal there. I guess if you wanted to make some sort of a summation, you'd say, well, at least it wasn't worse, because the headlines on FTX have just been incessant day after day after day, and just beating everything up that has anything to do with cryptocurrency and the contagion effect, etc. So I think if you wanted to take a little bit of calming here, you could say, well, it could have been worse. At least we've held 16,000 so far. We'll see if we're able to continue to do that moving forward. All right, back to the international. We'll look at India, and you can see that India's had a pretty decent move to the upside here. Didn't reverse the way the other markets have following ours. And you can see that this wave 4 is disqualified as well. So we're just looking at the resistance area, and that's right here at 44. We came back down. This is like, are we going to go all the way back down to 41? So far, we've held kind of in an area like falling off a cliff type of a thing here. It wasn't a massive area of support. It was a little bit, but so far it's held. So you have to be impressed with that. But if India could get above 44, you have something going there, but it's got to get there. It tried in November and we came back down, but now it's giving it another go. But above 44, something pretty impressive. If it doesn't, then we wait and see from there. And so I wanted to show, we hadn't looked at Japan, so we'll go ahead and look at EWJ, I mean, for Japan. We had talked about how their bond market was in disarray. Doesn't seem to matter. Market's going up, and this is when you say, you know, the bond markets matter, and when there's the kind of confusion that's going on over there in the Japanese bond market, but to see the market moving to the upside, you can see that zigzag there. Again, the zigzag mastery class that we were talking about there, right there, and almost touched that 61.8% dead on the nose and backed off a little bit. But the key will be, and why, how, but can the EWJ get above 57? That would be pretty amazing. Looking at Germany, just holding in there around 25. I mean, you have to be impressed that the German market at least hasn't rolled back over when we relabeled this to a 5-wave to the downside pattern. But again, just for 2 weeks of absolutely nothing, going dead sideways. But as we've talked about, for the German market, that's actually probably a pretty decent thing that it's held that so far, hasn't given it up, and perhaps we can build and break up and disqualify this pattern. But so you have some patterns that are in danger of getting disqualified. You have the diamonds that have relabeled to a wave 3 to the upside. And then you have other patterns that are still, like the Qs, are still in very solid wave 5 to the downside patterns. So what do you do? Again, patience. This is where patience comes in. Don't underestimate the power of patience in the world of trading. It's extremely important. Let's take a look at, I imagine this will come up in the Q&A, so we'll just cover them off now. Oil, moving, look at this doji here. We tapped the 10-day moving average because on the low yesterday at the open, we were down at 65. This was getting close to really a breakdown in oil, but it held that 65 level. You break down below that, and then you got in the 50s coming next, somewhere in the 50s, but it did hold it. So it opened lower and then traded higher, closed a little bit off the highs, bounced back up. But again, on the high, just tapping the 10-day moving average. So you make an argument that on the open yesterday, we were a bit oversold. So a little bit of a bounce back makes sense. And then a doji on the close. So I think you see something happen with oil tomorrow as well. So we've had really very little happen in the markets last week other than the low volume rise. We've had the recovery of that at the start of the week, everything on low volume. And I think, we get the direction tomorrow. At least it would be nice to see that. Looking at gold, haven't quite made it back to that previous 4 yet. But after getting overbought, we came back down to the 10-day moving average, and we've just been hugging that ever since. But you would have to say the likelihood is a destination of 168 on the GLD, and then we'll figure it out from there. Just very similar to what happened with the diamonds once they wave 5 was ended, and you go back and relabel the pattern, goes back to the previous 4, wait for the next impulse to label, and it has. And I think that's what will happen with GLD once we get to 168. It doesn't happen until you get back there because that follows the rules. But once we do, then you see it from there. All right, I did want to show you one of our alerts. This is from our time strategy, which has been the most active of our different portfolios that we have at EWOtrader.com. You can check us out if you want to go there. If you're interested in an alert service, we send you out alerts for entries, any adjustments, and exits. And you can see this is kind of an average of our time strategy. It's based off of AI technology, along with a search that I used to use for calendar spreads. And you can see we generated 30% in 13 days. So we try to keep these around 18 and 21 days on average when we can. So a little less on the time frame, kind of in the area of what we look for in the gains. And you can see here was the entry, and this is what we look for. If you're new and haven't seen this before, we look for stocks that have had a big drop, And then I noticed in the past that when stocks have a big drop, they tend to go a bit sideways. It's almost like the stock's in shock. And so then we added in AI, which is true AI, constantly evolving and analyzing data. And then it gives us a score on the likelihood of it staying in there. So it's more than just, hey, the stock's dropped and it's likely to go sideways. And we have technology, AI-based technology, giving us a score on the likelihood of staying there. And that's how we pick our entries. And then you can see on the exit here, 13 days later on the chart, we had a little doji there. So we had moved to the upside. We had a little doji, and it's like, what can happen with that doji? Are we going to take off to the upside? Are we going to reverse and head back down? And so the question came, well, what do you do? And so you go ahead and you take the gain, is what we did. Now you can say, well, you're looking at the AI to give you more confidence in what's going to happen, and look what did happen. So remember where the doji was, and looked like we could go either direction, and so it did start to move to the upside, and it's like, oh yikes, we did the absolute right thing, and now it's coming back down. And so if you had the patience, but after this doji, you go up 2 days and it looked like we absolutely nailed it. I mean, we couldn't have exited better. And then you've come back down. So try to be fair. We pat ourselves on the back when we do well. So we need to show, it is Monday morning quarterbacking, right? But it's also, we have the technology that we're relying on. And sometimes you say, well, if it takes off to the upside, then you start to lose that gain. And it did initially. Now it's coming back. And if it comes back down to 70 and we get around that 21-day mark, well, that would have probably been a 50+% gainer there. But if you got 30% in 13 days, are you going to complain about that? Probably not. But again, I just wanted to be fair and didn't just say, hey, we nailed the exit. Well, let's take a look at it and be upfront. All right, so now let's go ahead and take a look at some of our past. There's only two that are open case study considerations that we looked at in previous trade finders. And we looked at OSK. If you look at the 10-day moving average, we knew that we were a little bit overbought. We had the doji. So we had talked about, well, we could come back to this 90 area. That wouldn't be upsetting because we are overbought. That's where the 10-day moving average is. And then you look at what's happened since then. It's exactly what happened. We came back to 90. We also hit the 10-day moving average. We moved back up. Looked like things were going great. But again, that's the low volume stuff from last week. So the beginning of the week, we're back to 90. So I don't think if you're long this, if you're following this, I don't think there's any reason to get out. But if you break 90 with the follow through day, well, then you have a whole different story. And then maybe perhaps at that point in time, you abandon this one and move on. But at this point, I don't think you do. There's still the target there of the previous four, and we're holding at support. We are below the 10-day moving average, but again, it's all eyes on the Fed and what's going to happen with the markets tomorrow. And then last week, we looked at Monster Beverage, also was overbought. You can see the vertical move, and there's the 10-day moving average. So if we come back to test 100, where the previous 5 was, no harm there either. And that's where we are. A little concerning that we closed below 100, but just barely 99.79. Would have preferred to see a close back above 100. But you've heard me say this numerous times. What goes straight up often comes straight back down. So we got vertical. We broke out of that triangle, came back down, retraced it, hold 100. Again, if you're long this, I don't think you panic yet. It is an area of support, but if it gives up 100 and starts to move back down, perhaps in a weak market, then you want to go ahead and change your mind. If we are going to move into an area of a recession, and a lot of chatter on the financial networks today on the fact that the yield curve is basically getting worse. So let's just go ahead and take a look at that. And you can see it's just unbelievably inverted. So that has to matter. It just has to matter that the yield curve is so. Look at that. So you can see what people are talking about. There's the 2-year way up here, 4.5%, and here's the 10-year 3.7 or so. It's amazing. And so what don't we know? The bond market is a great leader. It's a massive market. There's so much money in it. There's so many smart people in it. It's telling us something, and the equities market up to this point is not paying attention. So what's going to win out? A lot of people don't pay that much attention to the bond market. I just don't think you can ignore that. And I think we have to be cautious. And you've got all these mixed signals. I mean, it is a mixed market right now. Just the markets, the signals, the bond market and the equities market are not in sync at all. So it's just one of those times where you watch, you gain experience, you pay attention, you take notes when stuff like this happens. And when you see it again, you have an idea of maybe what to look at, etc. But the important lesson is don't guess. Wait, be patient, let the markets come to us. And I think that's what we really need to focus on right now. So again, on our two that we would consider to be open from the past 2 weeks, everything else has been closed out. You would just, I think, hold on both of those. Both of them got a little vertical. Both of them came back. Both of them are holding support. And so let's see what happens with the markets tomorrow. And then perhaps by next week, we say, hey, you know, would have gotten out of both of those, or perhaps both of them are back off and running again next week. But we'll have a lot to talk about regarding those two positions next week. All right, let's see what we can do about finding a case study consideration for tonight. For those of you not familiar with this program, it's called Profit Source. You can find out more about it at hubb.com. And if you're interested in Elliott Wave, or if you're an Elliott Wave fan, to me, this is the best Elliott Wave software that exists. And I've tried all the ones that I know to exist. This is the best. It's programmed exactly to Elliott Wave. It's not based on anyone's adaptation. So when I look here, there's three results. This EWO, those are my searches, which is included for our alert subscribers at EWOtrader.com. If they have Profit Source, they get those searches as well. Just people that own Profit Source that aren't Elliott Wave option subscribers do not get those searches. So you can see there's three here. Lithium Motors, which is interesting to me. I'm not a big fan of the REITs, so I'm not sure we're going to pay much attention to that. But look at Yum China. That one's got my attention there. You know, there's just been so much stuff talked about with the Chinese lockdown. But look at this, kind of bucking the trend here. You know, you had the great, let me get the volume off here. You had the great signal here on the DMI, and the positive directional indicator came back, but now they're separating again. You got a gap up today. We've put on the Elliott Wave pattern, and you can see it's in a wave 3. So I really like it when you have a wave 3 and a confirming DMI. That's one of our favorite signals. And is this gonna, you know, where's the negative catalyst for this if China is going to eventually really open up with their zero COVID policy that's been all in the news, et cetera. And it's just been so difficult to do anything with Chinese stocks, but pretty much everything got a lift today, China-based, and that looks pretty darn good. So I don't know that we're going to come up with something much better than that. We've held support here at 52. The only negative here to me is that gap. Hate to see that, because you know that gap could get filled tomorrow. So that's a concern. And then if you really wanted to get really picky, you can see these. But remember, this is an international stock, so relies on what happens overseas. So you do get some more gaps than you do on just U.S. only issues. But I really like that one. So we'll see what Lithium Motors looks like. See if that's going to give us any sort of a run. Man, it's a nice zigzag there. We'll probably look at that a little bit deeper tomorrow night. But that's a pretty good looking DMI as well. CCI looks good. Those are our confirming indicators. We educate our subscribers on all of our confirming indicators, but look at that zigzag pattern. Again, we'll touch this more tomorrow night. But that, well, geez, that one has some room to go too. That's tough. Both of those look really good. I don't know how you pick between those two. the difference would be in the Elliott wave patterns. We got a wave 3 on Yum and Lithia. We're still in a wave 4. So the zigzag could come up. You see, we're only at a 43% wave 4. So you could complete the zigzag and still stay in the wave 5 downward pattern. So you could have an upward move here, because remember, when you have a wave 5 to the down, the wave 4 is an upward corrective move. So we could go up here, hit 50%, satisfy the zigzag, and still not disqualify that 5 wave pattern to the downside. And that's what's the beauty of zigzags, is that you can trade within a wave. You don't have to just look at the big picture. You can find some shorter term stuff and trade patterns within waves. But if we had to pick between the two, I think we go ahead and go with Yum. So that's going to be our choice for tonight. So for night 11/29, we're going to do Yum to the upside. Now, since we only had a couple to look at, we did make note, or I made note last week, of a couple that we wanted to keep an eye on to see if they could potentially become something we'd be interested in. I wrote down 3 that we looked at to just keep an eye on. One was paychecks, and you can take a look at that, and you can see the doji on Friday, which the market had a little doji Friday, so a lot of stocks did as well. And looking at the moving averages, we hit the 50-day moving average on the low. I just don't see anything earth-shattering there one way or the other. If you were long, I don't see a reason to get out. Not sure there's a great reason to get in yet until we see what happens with the market tomorrow. Archer Daniels Midland in the food area was interesting to me, and that's held in there pretty well. We're still above the 10-day moving average. We tested the recent high, so that really could have something going if we come to do another test of that level. The DMI, the ADX needs to turn and move back up. It needs sort of a decent market, and a positive outcome from Chairman Powell's speech could be enough to break that above. And if we can get above this area of resistance here in October, I think that's a good one. So I think we keep an eye on that one. This is the one that I made a comment on that surprised me with the pattern on Home Depot because of the housing market. It looked like it was ready to take off. It did pretty well last week, but we came up to this area here of resistance, and that got turned back. But again, it got turned back yesterday and today with what a lot of stocks did, taking back what happened last week. And that's exactly what this did. Is it, we had the doji here, it took off, ran into resistance, came back down. Just found that one interesting to keep an eye on with what's going on with the housing market, with interest rates going up, etc. So that's just more of an interest thing. I feel like there's going to be an opportunity for a short position there versus moving to the upside. I believe last week I made the comment, well, perhaps it's one of those scenarios. The used car parts, or the car parts dealerships are doing well. Those stocks, AutoZone, Advanced Auto Parts, those kind of stocks, because cars get expensive, people tend to fix their cars. And perhaps if people aren't going to buy new homes, they're going to fix their own homes. So that could be the fundamental scenario on why Home Depot goes up. But that one just makes me a little more nervous than the other two. But since we'd made notes of them, if we're going to make notes of stocks to keep an eye on, let's come back and visit them and see what they look like. So I'm going to go ahead and write down LAD as one to look at for next week, as just a watch list type of thing, just because I'm curious with the fact that we've got the zigzag within a wave 4. And I'm always curious as to how that plays out. Does the zigzag complete itself and move that wave 4? I think that's highly likely, especially with that DMI. But we had to pick between the two, so we picked Yum. All right, so that's everything I've got, and about 5 minutes early here, Zach. So perhaps we can get a couple extra questions in tonight if I try not to be so long-winded on my answers.
Absolutely, and I don't think anyone's upset with that. Thanks for that presentation there, Rob. And yeah, I was going to say the LAD will be good for next week, but it'll also be good to keep an eye on for tomorrow, and to go into better or to greater depth with.
Yeah, I think everything is going to be easier to understand after tomorrow because the market doesn't seem to know what it wants to do either.
Absolutely. So you were right. USO was certainly in the chat. So well done on covering that. Salvatore would also like to look at Amazon.
Not a shocker there. This time of year, you obviously want to see what's going on with Amazon, and that's really not what you want to see, though, is it? I mean, you can see this breaking to the downside here. Take the DMI off. That's pretty negative looking. Is that a foretelling of not such a good Black Friday sales, etc.? So you see that we talked about how that was going to have some effect on the market, but it seems like it's more in line with what's Chairman Powell going to say tomorrow. We had the China news yesterday, which the zero tolerance policy stuff, which a lot of people credited with moving the markets down. I still think it was just the market taking back the low volume rise when nobody was around during the holiday week. I think that was, the financial markets always got to come up with a headline. They always got to have a reason why stuff happens. But we just look at the patterns and let the market tell us rather than trying to come up with a reason for why the markets are doing what they're doing. It's just talking points on the financial networks. But the fact that we weren't able to get above the 10-day moving average even last week, I think is really telling on Amazon. And so now you have to look at how important this level is here around 90 with that wave 3 low that occurred back on the 9th. Can we stay above 90 and start to bounce back to the upside? We still have this area here at 110 with a gap that needs to be filled. We could go up and create that wave 4 in a bullish market, creating a little bit. It's not the most well-formed triangle, but it's not awful either. So I think we're about to see some sort of a move out of Amazon, and it's a good 10 to 12 point move that could occur out of this triangle that we have. So if you break to the upside, that's right at the wave 4, filling that gap. If it breaks to the downside, it's right at the wave 5. So I think what we can say here is very soon Amazon is going to make its move to the previous 4 or the 5 to the downside. So one of those two things is going to happen with the breakout of this triangle. And it doesn't look like we're going to have to wait too much longer to figure that out. The DMI could come lower, but we're kind of in the point of that triangle. And, it could bounce around and maybe form the triangle a little bit better, but I don't think there's going to be a whole lot of sideways stuff here, not this time of the year on Amazon before we get that break. So I think if we get a decent market tomorrow after, if Chairman Powell does sound a little more dovish, this could sprint back to the upside and fill that gap at 110. But that downside breakout is very possible as well. He tried to say. So I think that's one to keep an eye on. It's going to move. Just can't tell you which way. Triangles trump everything. You can look at the wave 3 to the downside and say, we're in a wave 3 lower. It's going to go lower. But when you see a triangle, they can go either direction. And Elliott always talked about that too in his works, that he really paid a lot of attention to triangles. And it's interesting how when you get out and you're looking at information out on the internet regarding Elliott wave, if you've looked around and seen all the stuff that's out there on Elliott wave, you don't see a whole lot on triangles, which is interesting to me because Elliott talked about them. If you read his works and you read what he wrote, and I think that makes a lot of sense if you're going to trade his stuff to get inside his head, he talked about triangles a lot. Anyway, I just rambled on. The one thing I said I was going to try not to do.
It happens. I think everyone, or at least majority, would say they enjoy your rambles. I certainly am one. And so next up, we will go to YouTube. Tom would like to look at CAT and says, what about CAT at 190?
Well, I still think CAT comes down there. It's just a matter of when. It did go back up and test 240. We said it looked like it wanted to go try 240 again. It did. Now look at this triangle that we have here. And I just find it, I don't see the fundamental scenario for Caterpillar to move to the upside, but we don't trade fundamentals. We trade charts. We had this vertical move. We've consolidated. That's my favorite triangle pattern. When you have a vertical move that goes into a symmetrical triangle, it breaks out. This one will. If it breaks to the upside, it'll surprise me, but it's in a triangle, so I won't be that surprised. And if it breaks to the downside, I still think that we come down here, at least fill this gap here at 200. We'll see if we make 190 or not, but 200 is the likely area, I think, here, filling that gap. But we're going to find out soon with this triangle here. Let's take a look at the DMI is really high there. But when you have this vertical move like this, and then it consolidates, let me try drawing that line again. When you have a vertical move and then it consolidates into a symmetrical triangle, if you ever heard me do any live seminars, etc., I used to illustrate this. It is my favorite breakout pattern. So Caterpillar is going to break out. I don't know which way, but it's going to break out, and it'll be a good 10-point, maybe more move. It's getting ready to happen there at a Caterpillar. So if it breaks down 10 points and we get down to 215, then what would stop it from coming down to 200 and filling that gap?
Very well. Thanks for that, Rob. So we looked at Japan, we looked at Germany. Mike here has asked if we could add EWZ Brazil to look at tonight, as it's looking interesting lately.
Okay. It's been a while since we looked at Brazil. We did it a while back on the weekend updates, but yeah, that's a pretty nice breakout there. Small triangle here, so that might be the end of the breakout move. You can see that was a little triangle. We came down basically, within a hair of touching that previous 4. So I think you come down, you move back to the previous 4, then you consolidate in a triangle. Is this a new impulse move to the upside? It could be. I think that the initial breakout from this triangle, that's probably it. So then the question is, do we come down, test the breakout, fill that gap, or are we off and running? So I think you want to really pay attention to what happens tomorrow on Brazil, but it could easily be the start of a new impulse move, since we've corrected back to the previous 4, and then you break out of that triangle. That's how impulse moves start. So if you get another day or two moving to the upside there, that could be something to really look for if you're looking for something on the bullish side. So yeah, I agree. Was it Mike? I agree that was a really interesting looking chart.
Yeah, agreed. And Mike actually had one more symbol for you, and that's EEM.
Yeah, I almost put that one up, the emerging markets. You can't do them all, right? I wanted to look at Hong Kong too, so but just trying to save some time. But the key here is breaking above 38. It looked like we tried it and failed, and then we hovered there, and then you see yesterday closing, you got a gravestone doji there right on the 10-day moving average, and yet it goes to the upside. That's not what's supposed to happen, but it did. It's still a doji, but you jump to the upside, and now we got another one. So there's some indecision there on the emerging markets, but this could be a place, because it's been so ugly for so long, that you could see, look where the wave 4 is. The previous wave 4 way up here, and it was a 38.2% wave 4. So we did extend past the 61.8% wave 5 extension. So there's plenty of room to run to the upside there on the EEM. So I think that's going to be pretty interesting. Look how high that line is, to keep an eye on there. That could be another place to, I've talked about this before with money rotation, the stuff, and that's why I think the Qs will be interesting, really interesting at some point. The things that have been beaten up are going to be the ones that have the greatest percentage gains when things do turn around, and perhaps they have been. The diamonds are trying to tell us that the low's in. So it's just interesting times. But I think both those charts are good places to hide. And I think as far as a risk to reward ratio, risk to reward management, you would have to look at the EEM and say that that makes a lot of sense.
Yeah, I agree with you, Rob. Thanks for that analysis there. And I am wondering if you might be able to guess the next one that's been in demand from the multiple platforms, more than likely.
Tesla?
You know it.
Yeah, it's, Elliott Wave has been so good on this. People have been pretty disappointed on where the stock has gone, and you've got all the ancillary stuff going on with Elon, and the Twitter stuff, and is he going to be spending as much time with Tesla? Some people say it doesn't make any difference. It's the market. It hasn't been too excited about it, but the key here is that we are trying to hold 180 here. And the longer we can do that, we broke it, but it didn't follow through. So we had a breakdown, but no follow through day, back above 180, and it's holding there. We could get a bounce in a decent market back up to that wave 4, but then that's going to be a really difficult point for Tesla to get back above. A couple reasons. One, that's the breakout point of that triangle way back in July. And then we came down and tested it again. So we created more resistance in this area in October. So if we do bounce back, it's going to have a hard time getting above 230. So I think with any sort of a bounce, that's your upside. And as long as it stays above 180, you've got a realistic chance of that happening. But if Tesla breaks below 180 with a follow-through day, again, we didn't get it here, it broke below it, but there was no follow-through day, then I think you're looking at that wave 5 target. But it's at the key area. So right here is where bears watching to see how it acts with this 180 level, because that's so important right now. It held on, a couple days ago. Can it do it again if it tries to break below 180?
All righty, always a fun one to look at there. Next up, we have,
especially right now. See, we got another zigzag that's going on right here. So you've got 2 of them. So that's a little bit concerning. So you've got the big zigzag here, and then you've got another one within it. So big right there. Yeah. 180 needs a hold, or it gets really ugly.
Agreed. And who knows? You never know what Elon might tweet, and just so many external factors with this one. But
I see what you did there with Elon tweeting.
Yeah, he's in control now. So we'll go to XOM now from Dan.
Okay. Exxon Mobil. There's the headlines again about the OPEC production cut. So is that what turned the market down? OPEC does not want to see the price. They are not happy with it being down where it is now. So they're going to try to do everything they can to generate it, move back to the upside. But it's already elevated from where it was. So the oil companies are doing well. And that's a good looking chart there. A doji, so you got to wait and see what happens tomorrow. The negative is it is below the 10-day moving average, but again, that's yesterday and today. As long as it holds above 110, I think you stay long this stock. But if it breaks below 110, then it's coming back down to 100, and there's a ton of support at 100. So that's pretty easy on Exxon. If it holds above 110, then I think we take off on this run, but it's got to break above 115. You can see it's got kind of a little bit of a trading range going on here between 110 and 115. So break below 110 and we're down at 100. If we can break above 115, then I think it would go to 125. So there's room for this one to go depending on what it does with this trading range and then this doji here. So yeah, it's good looking. It's one of the better looking bullish charts.
Agreed. Yeah, not super easy to find in these conditions. Phil would like to look at XLF.
Wow, we haven't looked at the financials in a while.
What I thought you might say.
Yeah, and it's just this one has been confounding to me. It's finally starting to move, but even back here when we were going lower, it was like, why? Because we looked at the yield curve. It's not, I just want to be real clear on this. On the financials, it's not just interest rates going up that allows financials to make money. It's the spread. That's where they make money. So they borrow short term, they lend long term. So when the interest rate spread widens, that's when financials make money. And clearly you can see what's going on just with the inverted yield curve, just from that standpoint. So think about what they're doing in the short term. It's the opposite, right? So you've got, you know, interest rates on the short are higher than the long, and you would think, well, that's not what you want. Well, they can reverse it. You know, they can tie up their money longer if they want, and lend it shorter. So it's just the spread allows the financials to make money. And so finally, we're gotten a little bit of a bid here on the XLF, but another one that's pretty easy. 36 is key. If it can break above 36, then the financials are going to run. They'll at least get to 38 quick, and then we'll see what happens from there. We did hold the 10-day moving average, so that looks better. That one's got the dragonfly doji, so that's a little bit better. It's a little more of a bullish signal, but it's got to get back above 36. So if you're watching the XLF, if it can get above 36 with a follow through day, I think it really runs. I think it takes off. There's so much resistance here. Remember, I've talked in the past about my mentor, talked about when you have 3 tests here, third time's the charm. And what that means is whatever happens when you test a resistance or support area on the third time, that's going to be the directional move for a while. So if we do break above 36, then it runs. If we can't, if we fall back to the downside, then we're headed lower, and we're probably coming all the way back down and testing these lows. So whatever happens around 36 here over the next few days is going to tell us the direction there on XLF. And I think you'll find that works really well. You just don't find that many charts is the issue where you have such nice triple tops or triple bottoms like that. But he used to really like to find those.
Yes, indeed. Thanks for that, Rob. And I just thought I might mention that I've had a lot of agreement and how your rambles are very valuable. There's been lots of those who find that they're gold and enjoy that aspect the most of your analysis at times. So
well, that's good. That's good to hear, because I really do wonder. I wonder if people say, I wish you just shut up and answer the question and move on. I do like to try to provide some justification for it. So I'm glad to hear that people aren't upset about it.
Next up, we're going to go to COF from Lonnie.
Capital One. This is another one you think would be doing well right now, right? The holiday season, people on credit cards, and we had the nice move there. But what was wrong? I mean, you guys know by now, right? It was vertical. So it goes vertically up, comes vertically back down. You just don't like vertical moves, as great as it feels if you're long right there. You got to be nervous because you know it's not going to hold. And that's what ends up happening. So let me take that part off. Just wanted to see when the earnings were on this. So tried to take off and run, but too vertical, couldn't do it. The positive is holding 100 pretty well here. So in any sort of a decent market, I think this time of the year, you get another run, you get another try at 110. Now let's see if we can't go in a more 45-degree angle. Again, if you've listened in or watched the stuff, you know, the 45-degree angles tend to hold. They don't get as strong. Everything has impulses and corrections, right? That's why Elliott wave works. That's how markets move, impulses and corrections. But when you get vertical moves, it gives it back. But when you have a 45-degree impulse move, the corrections are not as severe. And so those are the ones that tend to zigzag and move higher into longer term patterns. But 100 is the key here, and it's got to get back above that 10-day moving average. Today was a nice day. But I think that's a pretty good risk to reward place to be too, if you're looking for something long. So even as confusing as the market's been, you guys have asked great questions. We've found some, you know, with the international stuff and a couple charts here where you could have a good risk to reward combination for some long stuff. So well done on the questions tonight. We'll go ahead and take one more, Zach.
All righty. Can I bargain with you for 2 symbols?
Okay.
All right. So Pedor would like to look at UNG.
Oh, that's a good one. Yeah, natural gas. looking at oil, we need to look at natural gas. And remember, we talked about this, how it starts to be getting into that more bearish time. So when that move happened vertically there, that would have been a great time to go down as well. But it is holding the 10-day moving average. So this is surprising to me. I thought we would be back down at 20. I'm surprised that we've held this after that vertical move. I still think there's a good chance we come down there. There's a really nice doji there. So see what happens tomorrow. But if somehow natural gas could break above 25, it could go long. But I really think this looks good to the downside here. You got to get below that 10-day moving average. It's just, if you go back and look historically, the time frame, and I know everybody's like, well, we're in the dead of winter, snows haven't even really gotten going yet and stuff. But remember, the market's always looking 6 to 9 months ahead. So the market's already looking towards springtime, when usage wanes a little bit. But we'll see how that doji does. But those are your two keys, 20 and 25. If it goes above 25, you go long. If it breaks down to 20 or breaks below 20, then I think it's a really good short.
Agreed. And the last symbol for this evening is going to be UUP. And just as a quick reminder to everyone out there, if you enjoyed this session, don't forget to smash that like button for Rob.
Yeah, appreciate that. Thanks for bringing that up, Zach. This is a way you can trade the dollar. So this is another good symbol. And we're holding here and didn't quite make it. The dollar went down to 38.2. So UUP didn't quite go down that far, but it's holding in there just like the dollar did. And if the dollar takes off, you argue that that's not so great for the markets, but it's sure looking like it wants to. We're getting, really good support here. We're trying to break above the 10-day moving average. Here's another one that I think, this is you'll know tomorrow. If the Fed sounds anywhere close to being as hawkish as they've been, I think this blasts off, and I think it moves above 29 and you go up to 30 and you probably test those highs. If they seem more dovish and we break below this, then, we could be coming down. We could be all the way down into this area here in no time. There is some support at 28 right through there. You can see the support resistance there. So we'd have to break that first. But this one's going to go, tomorrow the dollar will move, interest rates will move, a lot of stuff will move tomorrow. But if it can hold here and break up, then you got a nice move higher. But if it falls, if the Fed seems a lot more dovish and we start to move back down, then you got a little bit of a level there at 28, but probably likely coming back down to 27 change at some point in time. Thanks, everybody. I hope you enjoy a little bit of an extra Q&A there. Wonderful questions, as always. We love having you. Thank you for devoting some of your valuable time to us. I say it every time, but time's the most valuable asset we all have. We very much appreciate it when you devote some of your valuable time to us. We do our best to make it a informative and educational use of your time. Thanks so much. Have a great rest of your week. Watch what happens tomorrow. It's going to tell us a lot, and we'll have a lot to talk about.